This week, we've had lots of lenders hiking rates, a couple cutting, and a few new twists on deposits and tax that really could shake things up for buyers. Plus, I'll share my views on why I think stamp duty might be the single biggest lever to unlock the housing market. Coming up in this week's video, we've got rate changes from some big names, a lender banning parents from helping with deposits, rumours of Rachel Reeves tightening up family gift rules, and my take on why stamp duty reform could actually be the key to fixing affordability. Now, before I get into this week's video, I just want to mention that there won't be a video next week. I'm actually going to be away and I will have no facilities to be able to record or even upload next week's update. So any key information that does drop next week, I'll try to include it in the following week's video. Okay, let's get into this. So first up, mortgage rates. And this week we've seen Halifax, HSBC, NatWest, Coventry and Santander, along with a few others, all pushing their rates up. On the flip side, we did see Skipton Building Society trimming some of their 2 and 5 year fixed rate products. Now, all of this shows just how jittery lenders are. Most of them are reacting to swap rates, but a few of them are competing for market share. Either way, it makes timing decisions really tricky. So it's more important than ever to get advice from a professional who can not only help you with your mortgage application, but also keep you fully up to speed on timing. Now, moving on to the bank of mum and dad. We all know that most first-time buyers rely on some level of support from their parents or grandparents to save for a deposit. And recently, we have seen more and more lenders offering low deposit solutions, such as the £5,000 deposit from Accord Mortgages, or even the £0 deposit solution from April Mortgages, amongst other lenders that are offering different. But this week, Newcastle Building Society have launched a mortgage for first-time buyers up to £350,000 worth of borrowing with only a £5,000 deposit. But here's the catch. That £5,000 deposit cannot come from the bank of mum and dad. It has to be completely self-funded. Now, I get that lenders want to encourage independence, but come on, let's be real. How many young buyers have saved £5,000 deposit with no help whatsoever? To me, this feels a little bit like a line has been crossed. Parents and grandparents have always helped their children onto the property ladder, and now lenders are saying, no, it's not allowed. Anyway, I'd love to hear what you think of this. Should lenders be policing where deposit money comes from? Now, here's where things get a little bit more interesting. At the same time as lenders are restricting parental help, rumours are swirling that Rachel Reeves is looking at reducing the £3,000 annual gift allowance in the next budget. So not only are lenders saying no help is allowed, now we've got the government that can tax parents more heavily for helping in the first place. It's almost as if every route of family support for first-time buyers is being shut down. Now that to me is really worrying, and I'd love to hear what you think. So please do, as always, drop your thoughts in the comments below. And now let's move on to housing policy. So after Angela Rayner resigned, the new housing minister has called for many of the big banks to attend a meeting in Downing Street where he aims to help first-time buyers. Now, I thought the first-time buyers were already a key focus of the government because we've seen lenders stretching income multiples and loosening rules off the back of government guidance. So why this fresh push? My guess is it's political. They're dodging the embarrassment of Angela Rayner, along with the embarrassment of that 1.5 million new homes being built target, which, let's be honest, has gone very quiet. Now, if the government really wants to help, tinkering with family gifts and allowing people to borrow more money, in my opinion, isn't the right way to go about it. The real blockage in the housing market is fluidity, or should I say, a lack of. And the cause of that is stamp duty. I've mentioned this in previous videos and I'll say it again. I say scrap stamp duty altogether for first-time buyers and cut it for people that want to downsize. Suddenly, the market will get moved. First-time buyers can get onto the ladder, older homeowners can move down the ladder, and the result is that more stock starts to flow through the channel. That's exactly what we need, fluidity. Now, ironically, as a result of all of this, tax revenue would likely increase because of the increased activity. So instead of strangling family support and taxing left, right and centre, why not pull that lever that actually works? So here's where we are. Rates are still volatile. Lenders are getting creative, sometimes in ways where it feels like they're crossing the line. And the government seem more focused on tax grabs than any meaningful reform. But stamp duty is the obvious fix. It's the one change that could unstick the market, help first-time buyers without pushing them into risky borrowing, and give older homeowners an incentive to move. I'd love to know what you think. Would scrapping stamp duty for first-time buyers and reducing it people wanting to downsize make a bigger difference than gift tax changes and lender gimmicks? Let me know your thoughts in the comments below. Now, if you found this update useful, please give it a like, hit subscribe if you don't already, and join me for the next update. The market shifts every single week, and I'll keep cutting through that noise so you know exactly what matters. Take care.